Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So a bit of a back and forth day. Some decent action in certain spots, but no real follow through, and that's pretty much the market we've been in. There's been no follow through, obviously, even when things look good, let alone buying higher at this point in a lot of different names. There were some names that were just rock stars, but it's been very specific on which ones those are. So let's just run through it because everyone's had a long day. You look at the spiders here. At this point, I see a lot of technicians writing about it, the same way I basically did. We've been watching this, that line right there, 210.70, 210.50 get taken out, and we've had pretty much, not a huge move lower, but some corrective type action, and we now are on the right side of this trend. So those who talk about trends and try and show some things, everyone's pointing out how from the beginning of the year lows, we are now on this side. It's happened a few times, but the longer we stay on this side, I guess the more problems it can cause. If you want to look at glass half full, okay, which I took a little bit of a stance of glass half full today because I did go home long a few things. We did hold this support going sideways here. And even if, just say, the market wants to be really bearish and work off this little down move, perhaps you get some kind of bounce back here, to create a right shoulder, and then you have this big, or have this head and shoulders top type pattern where on a bigger time frame you have the left shoulder, the head. So if we, as a trader, maybe there's a spot to make at least some money from here. We get above this high, which was yesterday. We get above, just say, 209.10. Maybe it retests this resistance into the moving averages that are curling down. So could be a trade there. Sometimes it just doesn't happen that way, or sometimes it comes in here, goes sideways, and then resumes the trend. At this point, I really don't know. I just know that, a little bit of a doji. Last time we had a doji here, we continued lower. So we'll see what happens, this time. At this point, I am a little long. Don't love it, but I'll see, what's going to happen next. Go to the IBBs. They definitely tested, the trend somewhat, and here it is right there, and seems as if we'll know in the next day or so whether the bios get weaker. We talked about 360, went a little bit below it today, and then came back above it. So see if if it stays weaker on the bottom half before going lower or not. The IWMs also, tailed into this ascending channel here. So a lot of the same type of action here. So it's barely hanging on, but we'll see if that continues. This was the last time the ascending channel broke to the downside, and that was your outside day right there that helped trigger that. Here was a tiny one right there yesterday, and now we'll see if it holds this and stays maybe on the right side of that. Remember when this broke, it stayed kind of on the right side of it for a day or two, and then broke down. I had that one fake out here and then continued. So we'll see what happens, there tomorrow. XLF, hanging around. A lot of them, were a little weaker, went green. Seems like this Bank of America has been the go-to ever since Bank of America broke, this small descending channel right here. It's been just stair-stepping up, holding the 21-day, the 8-day engulfed this whole spot, so that looks like it can go higher. Goldman Sachs was a little weaker, but it held the 8-day, still above the 21-day. Morgan Stanley, held the 8-day. I went over the 8-day on a lot of these charts, and a lot of them held today. So if you were short, maybe you covered. If you were looking for a long, maybe you got long, and we'll see. The banks have been, a place to go because, bonds have been, getting crushed, and everyone's like, how did this happen? Meanwhile, a lot of experts out there have been saying, be careful of bonds. I know last year a lot of them said it, and sometimes it takes a lot of time before it happens. Be careful. Rates have to rise. Oh, it's not going to happen. It's never going to happen. Why wouldn't it happen? We're friggin', it's zero. Economy's okay. I know it's not blockbuster, but why wouldn't it? The market's forcing the hand, and the TLTs gave you a little bit of clues that this was the case. You had the ascending channel here, or the accelerated trend break, to the downside. Here's when, it followed the 8-day that entire way up and then broke below the 8-day, broke below the 21-day. Here was your intermediate channel that broke right there, retested, it continued, and then lost the 200-day and never reclaimed it. And now look where it is. So lots of ways to get out of this, and lots of ways to see that rates could rise with the and bonds can get beat up with the action and the TLTs. And if you reverse it, the TBTs have been to the upside. Okay, this is when the TBTs kind of reclaimed the 8 and 21 day, gave you a move, gave you a little corrective phase, got back above it, and now, now it's above the 200 day. It's above every moving average here. Tiny bit extended, but above every moving average. So that trend now is trying to be back to the upside. Then you go to individual names. Netflix was a rock star. I know they have their shareholder meeting tonight on, there's talk about whether it's going to be a 5-for-1 stock split, a 10-for-1 stock split. I hope that they do a stock split because a lot of people are playing it for it. If it doesn't happen, it could trade off. But overall, gave some guys in the chat room a nice trade above 635. That's the 52-week high, closed strong, all-time high, and who wants to be short just in case they do that? I know it doesn't change the valuation, but it changes the psychology. If they do 5-for-1 or 10-for-1, chances are, people could say, oh, wow, 5-for-1, it goes back down to 110, it can go back to 150, and that'd be almost, whatever it is, $1,000 versus getting to 1,000 without doing it. Remember the Apple, when Apple split 10-for-1, or whatever it is, 7-for-1, I'm like, split, then I'm like, iPhone to head, this is what it needed. It changed the composure, changed the liquidity, changed the psychology of the stock. I think it was like 76. I'm like, it can go to 100 plus, went obviously to 100 plus. And now, since we're talking about Apple, I didn't really play it until the end of the day when, it had a little bit of a bounce. You have a small red dog reversal. It did hold the 150 day. It does not look that compelling, but, this bar always gets me in Apple, and I hate when Apple runs without me, and I still think, it's got a chance, but, little relative strength today, not a heck of a lot. It did trade below 126.83 and come back above it, so that's my strategy. So if that's my strategy from 132 to here, got to be long some just in case, especially it's Apple. But overall, not so compelling or blockbuster, but still in this, this big range. LinkedIn was strong early. Still looks fine. It, couldn't get through the 200 day at the first point. I'm still in some. I think that perhaps it could fill this gap more. It would be pretty, what's the word? It would be frustrating if it gave back more than half of this, or just say it went back below 214-ish. We'll see what happens next. It held this gap, let the moving averages catch up. So we'll see if the trend continues into the gap. But again, the market's not that strong. Facebook gave you a little bit of a doji. Was weak early on, and then all of a sudden after LinkedIn went, gave guys a nice trade when it came back above the prior low with that, red dog reversal into the moving averages. And at this point, it doesn't look great, but something to do. On the 5-minute chart, you could see how the trade developed a little bit better before the pullback. Here was that bottom tail came up, traded above the prior low, held above it, and then gave you a nice trade until finally it gave you the wide range bar and then came in. The airlines, we talked about them early, and then they wound up having a decent bottom move. You go to the daily chart, and they're still broken and still well below the 200 day. But today, gave you maybe a day one to be in for a day two. So here's your red dog reversal. Maybe it wants to fill this gap, and that would be a trade. We'll see what happens. UAL did kind of the same thing, maybe even a little bit more, engulfed it. So we'll see if there's a trade there. It's a broken trend, but it's been giving you day-and-a-half trades. We'll see. We'll see what happens with oil in the morning. Oil had a pretty strong day, a little bit off the highs, but strong. Amazon, can't really say much except for, you can't buy the top end of the range. So guys were thinking about buying the bottom end of the range, and you had a small red dog reversal here. Okay, into the support above this 421. It closed at 425. That was good for like $4. It was actually even a little higher. So if you made a good trade here today and took some cash flow out, maybe you hold a third into the next move. That's usually the strategy. Buy here, hold it for the day, stop at the low. If you did that, you made some money, and then you take a third just in case it continues. Google still just doesn't look good. Doesn't look good at all there. Below the moving averages, not much to talk about there. MBLY, this stock, it's not a great trader and doesn't really give you many days in a row, but you have this trend here and this channel, and if you're playing it for a breakout, I know I bought it here and I got stopped out, and I bought it again, today towards the end of the day, and looks strong. And if it's going to go, it's got a few different reasons to do so. Today, if you look at the volume, the basic studies, you go to volume, that's a pretty big volume bar, so that's what volume needs, or that's what stocks need to have volume to go. So this could be a day one above this descending channel, so worth it to give it a try. And that's really it. I feel like a lot of traders are a little, tired and frustrated, and I'm right along there with you. Market's only 2.5% to 3% off the highs as far as the S&P, so it could always go down more, like the DAX, or Germany, or and some of those indices that went 10, 11%, but we haven't done that yet. So, is this the norm? Are we going to return up from here? Maybe, or this could be the first time. So either way, you don't have to have, big bets here. I do think we talked about this morning. I feel like this is getting close to some kind of buyable spot. Europe's been down almost like 12 out of 13 sessions. I feel like it's worthy of a bounce, and if Europe bounces a bit, tomorrow, maybe that helps our futures for that overnight day-and-a-half trade. As far as like the FXI and China, it's funny, China's at 7-year highs, Shanghai's at 5,000, but the FXI, the high is here, lower high just shows you how it's still hard to, play the ETFs over there. This is $4 or so off the highs, and Shanghai's at 7-year highs, and you can even go to the CAF. How does that look? All right, that correlates a little bit better. And what's the other one? ESHR, I think, or EHSR. Well, the one with the E. I'm sorry, I'm a little, tired today. So anyway, what did metals do today? Metals got to the moving average and kind of sold off, which is what they usually do. So with all that said, pick and choose your spots, know your time frame, only trade stocks for a reason. And I do have somewhat of a reason for all the things on my VTF. So if tomorrow the futures are down 7, 8 handles, I will have to salvage some trades and deal with it. But I do think that Apple, small little bottom tail into the 150 days worth a try. Spiders, into this support zone worth a little try. MBLY, big volume, day one worth a try. LinkedIn held this gap. Going sideways, showed relative strength early, worth a try. So these are all strategies. It's not just, coin flips. And you should never just flip a coin in order to, be in something. You be in it for a reason. If you're in Netflix for a reason and you think it's going to have that 7 for 1, 5 for 1, 10 for 1, that's your reason. Okay? That's kind of a bit of a crapshoot, kind of tough reason. But if you didn't know that was out there and you just looked at the chart, you'd say, wow, big day one move. I should be in that, or not day one, just big breakout move. Then that's that. Some guys were looking at LLY. This had a nice move too. Lots of volume end of the day. Feels like something's cooking there, and I guess we'll see what that is tomorrow, if not, or if so. And Tuesday night, tomorrow's hump day. I'm gonna have to watch that commercial, to get a little laughter. And just keep making some moves. And again, if you're losing money and you're over trading and you're frustrated, just do less. Take the day. Take a few days. Get yourself back together. You know what you're doing. It's half mental, a third tact. And I would say 60% tactics, 20% mental, 20% execution, and then a little flower dust or trading dust to help out. Okay, something like that. Hasta la vista. I'll see you tomorrow. Have a good one.